All right, guys, let's go over the watch list for this week, and then maybe I'll have a chance to get into some of the other trades that we took. Hold on, I just got into a futures position, but for some reason these ticks are not moving. I don't know why. Let's see. The price just stall here. Let me see. I'm gonna check this from my phone. We've literally been at minus 33 ticks for a second, so. Yeah, I don't really know what's going on there. We'll get back to that later. All right, so first thing we'll talk about is a trade that I'm planning to get into, which is KO. Friday I was a little too busy to realize that this thing confirmed like bullish divergence, actually broke out of this downward trend line, and it's like playing around with these moving averages right now. So I'm gonna take a trade on this closer to market open. Won't be close to my preferred entry, but it's okay. I'll size light. First one that I want to talk about is Live Nation. This thing basically printed this bullish candle, this hammer candle, after selling off a little bit. So definitely some buying going on here. I don't think there's divergence on this, but I still want to trade it. More of a short-term swing than say something like 3-4 months out or even a year. So that's on top watch. Let me move these. Close. So yeah, my drawings show where I plan to get in. So an entry above the hammer at 156.70, and then my first TP at 161.18. Stop loss. Let's fix that. Stop loss will be under 152.91. So that's the first like high probability watch on my list. Let's see. Next one would be T-Mobile. Oh wait, let's talk about something else. So bullish doji candle, right, at support, and then we have 3 touches of a trend line, that yellow line that I just put. So 1 here, number 2 activated the trend line, and then on this last Friday that was touch number 3. So that was another confluence to make me go long. T-Mobile is a similar setup. Ignore the orange channel. I already traded out of this. I'm gonna get rid of this. So again, 3 touches of a trend line. So 1 touch here, 2 touch here, 3rd touch. Bullish doji, we're in a demand zone, so I will be going long above 230.79 to take this back to previous support that's now resistance at 235.59. My stop loss will be below the doji candle, so 226.75, somewhere around there. Let's see what else is here that I like. Where are my 200? Okay, not near the 200. And then let's see if there's any divergence on this. No divergence as yet, but we are oversold on the RSI, and usually when we're oversold, things tend to like bounce back up. So that's probably what this candle is signaling. So we're gonna go for that. Next on the list is Marriott. Marriott has been just been hanging out within these 2 trend lines for a little while. It's consolidating. Finally, I see some bullish volume come in after like 3 green days. So 3 green days, good volume. Now we're pushing up against this resistance line I'm thinking that we're going to break out and go for a little bit of a run to the upside. Also, if you look at I only use like 4 moving averages. Actually, I use VWAP sometimes too, but that wouldn't apply on a daily chart. So our 9, 20, 50, and 200 moving average has been crossed over and basically closed above. So this looks like it's given like a bullish signal to me. Let's see where our MACD is. Our MACD is green, right? Our MACD is green, and we're heading back up to the 0 line. This could show some momentum coming into the stock for a buy to the upside. So another thing that I'm watching. Let's see. So 4 touches of a trend line, strong bullish volume across all my moving averages. Next on the list, high probability setup is Merck. Merck is a health and technology pharmaceutical stock. There was some kind of announcement in the news that, you know, Trump was going to do something to do with healthcare, and everything started pushing up. I saw this when I was basically I was charting to see like what I could trade intraday or swing for options, because I trade futures too. Futures are probably my more profitable side of this whole trading thing. So I saw that this basically was flagging a little bit, right? So if we break out of this pattern, I am taking this to the upside. If we break out tomorrow, we could use this as a potential profit target. I usually don't wait that long because it's hard for me to hold my runners. I struggle with that a lot. I think you hear me say it almost in every video. Still haven't found a solution for that. So to be continued. So break to the upside, high probability setup. Amgen is similar. This looks more like the flags that I like, but we do have this doji spike from the bottom. Looks like liquidity was cleared, or actually no, there are no lows that this violated. So not really sure what the spike down was about, but you can clearly tell that buying occurred to bring us back into that zone. So I want to take this long on a breakout possibly to clear out this high up here as the first TP. This would be a longer hold for me. Less contracts though, to make sure that I'm managing risk appropriately. So very basic, simple. Next on the list, we have Dollar General. And the reason I'm watching this, right? So as you can see, we have this touch, this touch, this touch, 3 touches of a trend line. And now we have this green candle with this one basically resting inside of the green. This is called an inside bar. So I'm looking to take an entry above this inside bar at 101.34, and then profit targets could be previous highs, previous high, previous high. So we will label this TP1, TP1, and then we have, if it will open, TP2 and TP3. I don't even know why I put these TP levels so high. I know I'm not going to hold that long. I never do. I always cave. Moving on to our next stock that I'm watching, ARM. Where is ARM? ARM looks like it wants to break out. We have this touch, this touch, this touch. So I will be taking this long and potentially look to scale out at 160. What is this? Sorry, 159.31, 166 let's just say 167. Those could be TP levels. and it's a double top too. So yeah, you would want to definitely start scaling out heavier when you get to that point. Notable mentions. I see that Tesla had a like 2 down days. Like if you drop to a lower time frame, you'll see that. So we cleared out whatever stop losses were below here, right? And then, we basically started like changing structure, especially on I think it's a 15-minute time frame. So we see lower low, lower high, lower low, lower high, higher low, higher high, higher low, and now we're going sideways. If we can get back above 431.92, I would look to take this long. So it would be a break and retest. So this is the resistance zone right here. So we would break above, retest, go higher, potentially start scaling out closer to this level here. Sorry, that was not straight at all. Yeah, so somewhere over there. Who else was showing me something fancy? Netflix, NFLX. Netflix on a daily chart. I traded 0 DTEs on this. Contracts are kind of expensive to get them farther out. So I think it was a fair value gap that I jumped into and caught over 100% on these. Oh yeah, so this fair value gap here, we came down into it. I was waiting for us to hit this level exactly, but I saw that we wicked, closed within the body, and then indecision. So I entered at the breakout of this candle, and it was over 150% somewhere up here, but I chickened out and sold. It would have been way higher, but I'm fine with the profit I made on it. These dojis are telling me though that this stock wants to go back higher. They're selling off because I guess subscriber inflow is low. If we get to the 200 MA, that would be beautiful. I can add some equity, buy shares. I'll look to day trade this again. This will not be a swing for me because I don't want to expose myself to that much risk with the longer dated contracts. Last one we will talk about is Meta. Meta basically printed a hammer, right? This one broke above. I don't think I traded this. And then on Friday, massive bearish engulfing. There is a 4-hour order block down here. So if we can come back down, I'll take longs off of this level within this zone. We'll see if it happens or not. That is it for the watch list. This next part is basically an explanation for one of the people that I trade with about how I deal with finding or looking at structure. So this is specifically for you. Let's use INTC as an example. Let's delete the drawings and let's get rid of the moving averages, right? All right, so you can clearly see, right? Let me get my tool. You can clearly see. So we went high. It's a horrible drawing. Hold on. So we went high, right? Low, high, low, high, right? This low, this low. So you have a break of structure here, right? Because it basically pulled back and cleared that high. Then you have another break of structure right here because it pulled back and went higher. When I chart, especially those trades with the divergence taking place, I always look for my highs and lows and I use them as points of reference where to take profit, where there's support, where there's resistance, if the trade is still valid or not. On a lower time frame, this is how this looks. if this was flashing, like if the chart in pattern was flipped upside down, right, and this was a falling wedge, this wedge, this is a rising wedge, right? So if I was going to trade this, let's say we're going to trade this to the downside, like for puts, I would wait for bearish divergence to trigger. If we get a hammer candle, not a hammer, inverted hammer up here, right? Hopefully this draws properly. Like if this, say this is the inverted hammer candle, and I take puts at the break below this candle, my first profit target is going to be here, right? Then my second one would be here. This, yeah, this coincides with over here. Then the third could be here. Fourth could be here. At this point, you should probably be out of this trade because it's guaranteed there's an order block waiting or sitting here to send prices higher up. Unless you're trying to like hold your runners and have them at break even or go back to zero, whatever it is that you want to call it. So that's how I look for my structure, right? The question you had was specifically on target, where I saw my take profit levels, and I'll try to show this to you as best as possible. So the major level that I see here as resistance, this would be it. So there's an order block here that failed to hold when we dropped. It was support at one point, right? So you have two things here that show resistance. We dropped, we made a low, high, low, high, low, high, low, high, low, high. If it's not clear on the daily, you drop down to your 4 hour, right? Let me delete what I just did and we can redo it. Let's bring this in. So this one, right, again, you have a low, a high, a low, a high, a low, a high, a low, a high, low, high, lower low, higher high, higher low, higher high, right, higher low, so on, so forth. That's all I'm looking for. I just want to see where those levels occur, and that's what I use to dictate my trading strategy in and out of them. Sometimes you'll see where like we'll have equal lows, like 1, 2, 3. So this, I wouldn't change my assessment from here. If we started at the bottom and say, all right, this is your last low, right? And then this is your high. This is your higher low, higher high. I'm not going back to this, right? If you use that, this is basically a break of structure, but because we didn't close below, I'm going to say that this is still valid up here. So we go up, low, and then we have 3 touches here that didn't really break and close below. So this is a higher low, higher high, right? Higher low, and now we're at the same highs. I'm looking for a breakout for this to actually start moving to the profit targets that I set. It's not perfect, but it's work for me. Whenever we trade off of bullish divergence, that's how I scale in, scale out, figure out if the trade is still valid or not. So hopefully that helps. I don't want this video to get any longer, so I'm going to stop it here.